Namaste. So let me discuss banking and digital India with two disclaimers. One, it is a top-down exercise, not a bottom-up stock picking thing. We are discussing about sectors. Two, it's a dynamic exercise. We may change our views tomorrow. So with that, let's understand banking. Banking is what finances current GDP and future GDP. Okay. When I say GDP is growth, when I use the word future GDP, I'm telling it is what finances GDP's growth. As an individual, whether you want to buy a car or a home or you want to do your daughter's marriage, whatever is your need, if you can't do it, you have to go to a bank. It finances, it gives you the credit. Or a company, either to do current operations as a working capital need, or to buy a land or plant or machinery or furniture, expand, set up new factories. Everything is funded by credit from financial institutions. So I will keep using the word credit so that you guys, I'm not going to use bank, gives credit. I don't want to use lengthy sentences. So credit, current GDP and GDP growth is financed by credit, right? So, and that is the credit is given by financial institutions, lending institutions, right? So imagine the best case. What should be the best banking system? Best banking system is where whoever needs, all the financing needs, whether future or current needs, are met in a frictionless manner. I need not run around banks to get the loan. They are collected. Their underwriting process is very robust. All the loans are collected in a fair manner. And bad loans, I'm not using technical terms like NPAs and all. Bad loans are small as a percentage of total loans given. So I'm frictionlessly giving loans, collecting them back, and maintaining that bad loans are small percentage. This is what is a good banking system, right? Okay. So let's see why we think banking is set for a huge growth in the coming 10-15 years. Okay, that's what we are trying to make a case here. So whenever you think about banking system, banks are to the economy what blood is to your body. Okay, I'll repeat. Banks are to the economy what blood is to your body. I'll just little bit digress here. That is why, this is the reason why it's like, see, any part of your body which doesn't receive blood becomes numb, right? So there's no life on that part of the body, right? It's like that. Access to credit should be there to all people who have needs and who can pay back. So that is the reason why if economy gets into a banking crisis, it is much more difficult to and much more painful to come out of a banking crisis than a real world shock. Like COVID happened, it's a real world shock. Demon happened, it's a very small shock, small real world shock. And now currently there's a Russia war happening which has caused inflation. As long as this real world shocks are not resulting into banking crisis, don't worry, boss. Things will come back. It will be a V-shaped recovery. But the moment banking goes into a crisis, banks are closing down. It is something that is extremely painful. I don't want to go into fundamental reasons why it is like that, but just remember that banking crisis is more painful than a real world shock. As long as the real world shock is not resulting into banking crisis. Okay, that is what central banks did during COVID. What they did, they made sure that COVID ka shock, real world shock, closing down businesses, shutting down businesses, people staying at home, is not translated into a banking crisis. And then once people understood how to deal with COVID, things had a V-shaped recovery. But let's say central banks didn't take care of it, it would have taken another 10 years to come out of it. Okay, so even Lehman crisis, it's a banking crisis. 1929 depression in US, it's a banking crisis. We went through our own banks, not small, I won't say small, our own banking crisis in 2019, ILFS banking crisis. That's more painful. Actually, the slowdown in growth that we saw post 2015 is not because of demonetization. It is because of banks being in crisis. We were cleaning up our banks, forcefully asking them to come out and expose and clean up their balance sheets. So please remember this. banking crisis is much more painful than a real world shock, as long as that real world shock is not translating into banking crisis. Okay, this is one thing that you should take. Let me get back to banking. So we have made a case that banking is what finances current GDP growth and current GDP and GDP growth also. So what India did, India started giving private banks license in 90s. In I think early 90s, few banks got, again in 2000s, few more banks got. But in 2013, when we started, see, all these things happened simultaneously. It's not that after this we did this. No, even though in the video I may be telling 1, 2, 3, 4, but actually 1, 2, 3, 4 you should see it horizontally. Everything was happening simultaneously. 2013, when we started cleaning up the banks. So on one side, banks cleaning started in 2013. Second side, we started opening up banking license to more people and more kinds of banks. We used to have private banks. Now you are seeing small finance bank, payment banks, different kinds of banks, because different banks will meet the needs of different kinds of customers, right? Not everybody will be willing to lend to bottom of the pyramid to the best credit in the country. So we have started creating new kinds of banks which can meet needs of different kinds of customers. So now you have seen small finance bank. You have not heard this small finance bank before 2013-12, right? Payment banks. So we started opening. First thing we started is we started our cleaning process. Then we started giving license and created different kinds of financial institutions which can meet different needs of the customer. Like somebody, microfinance institutions give loans to really bottom of the pyramid, right? So different kinds of banks, different kinds of lending institutions. And then we did something called Digital India, which I would get talk about it. Then we did Digital India. Then we are now doing OCEN, which is open lending. Then we are also trying to do ONDC, which is open digital commerce. So I'm not going to get deeper into these things, but I'm just trying to make you understand that we are creating a system which would better finance current GDP and GDP growth. That's what is a good banking system, right? Because whoever needs money, because let's say you take an ice cream cart vendor, if he can't get access to finance, he will just keep riding the same cart. But let's say the moment he gets access to finance, instead of one card, he will do 2 cards or 3 cards or who knows 10 cards. A very enterprising guy can have a 50 cards. So suddenly GDP increases, right? Because of credit being available to all kinds of people in the country. Okay. So let me just introduce you to a term so that you will better understand what I'm trying to tell. So there's a term called credit to GDP. In India, it is 50%. Why it is only 50 to 60%? Because in India, we didn't do the foundation work that will make credit available to whoever needs it. See, for a microfinance guy, let's say you're a banana vendor, your income is a function of how much loan people are ready to give you. You don't have any money. You're just coming in the morning. Let's say you want to sell bananas and make money, because you don't have any money in your pocket. So your income actually is a function of how much credit you will get, right? But for a IT guy, credit is a function of how much income he has. If you go to the bank, what people will ask you, boss, show me your income. We will tell you how much home loan you're eligible for. But it's a different thing for microfinance guy, right? The finance that he gets will determine how much income he can do to an extent. I'm not trying to totally differentiate like this, but I'm just trying to think. Our credit to GDP is 50 to 60, but China's is 180 is because they built a system that is trying to meet different needs of different kinds of customer. Not every customer is the same. Some guy is high risk, some guy is low risk, some guy is 1 month loan, one guy wants 10-year loan. So this different kinds of customers with different needs, you need to build different institutions which can take this risk. So our credit to GDP even today is around 50-60%. For that, you need to create the infrastructure, I think, which we have put in place. And I think from here in the next 10-12 years, I think we may not go to 180, but I would say we should go from 50-60 to 100-120. That much I think I'm assuming. So why am I showing you that? Okay. So I may confuse you, but just remember this. And if you want to go deeper, just Google this word, so that, because I don't have the time to explain each word in detail. when GDP grows 10%, let me go there. I think I have done the calculation. Okay. When GDP grows 10%, real GDP will grow either 2x to 3x of it. Either it will go 20%. If give me a minute, I think. Yes, sorry. So let me go here. If GDP grows 10%, credit grows somewhere between 20% to 30%. This is what is credit multiplier. This is what I am trying to tell you. So if GDP is growing 7%, credit in the system will either grow 7 2s are 14% or 7 3s are 21%. So that is called credit multiplier. So let's say in the next 10 12 years, GDP is becoming 3 times, 3 to 9 trillion. Let's assume. In 10 12 years, I'm not saying it's happening in next 4 5 years. So credit will grow either 2 times of it or 3 times of it. So 3 2s are 6, 6 to 9x. And I also told you something else, that we will, as India, we have laid the foundation, we have created the regulatory system, we have created the different kind of financial institutions which can give loans to all kinds of customers in the country. So we are increasing our access to credit. So I am making an assumption that credit to GDP will go from at least 60 to 120 in the next 12 years, at least 12 to maybe 15 years. So another 2x growth is there. So your GDP grows 3x, but credit grows either 6 to 9x because credit multiplier is 2x to 3x. And then there is another tailwind for you, that credit to GDP is going because now you have created different institutions that can cater to different customer needs, which we have not done before. So another 2x. So if your economy is going 3x, in the next 12 years, credit should grow somewhere between 12x and 18x. I would say 10x. Let's take 10x. Let's be conservative. Let's take 10x. If somebody wants to understand this deeply, you can call me if I have confused you. But we see that banking as a system as an opportunity to grow minimum 10 to 12 to 15x in the next 10-15 years. So that, and like I explained you in the foundation tailwinds graph, that was when there is a tailwind, you have to also lay the foundation. You need to create different financial institutions. You need to put the robust regulatory system. We have done all these things. I will just go through in a PDF what all we have done. I'm not going to go deeper, but I'm making a case that our banking system as a whole is poised to grow somewhere between 10x to 15x in the next 10 to 12 years or maybe 15 years, boss. Don't hold me to this. These are my assumptions I'm making. If things change, I will change my assumptions. I will correct myself. But as of now, I think we have done all the foundation work to go there. Okay. Let's see what we have done. So what we did, first, insolvency and bankruptcy code. Can you imagine that country like India, let me see, yes, I've come here, right? Country like India didn't have an insolvency and bankruptcy code. What is it code? This is the code that we have legislated so that banks can collect the loans, and there's a way to collect the loans back. I give a loan, how will I collect my loan back if the loan has gone bad? How to recover the loan? And also it allows for the creative destruction in the economy. Because I took a loan, I'm an entrepreneur, I took the risk and it didn't pay off. There's nothing wrong in it, right? I really tried, but I failed. So banks should have a mechanism to make deals with me and collect the loans back, or restructure my loans, or sell off my assets and get their money back. Or if they can't get their money back, take a haircut and move on. And we didn't have a robust mechanism to do it, which we did it, I think in 2015 we passed this law. And we will keep on improving on this law. But can you believe that we didn't have this law before? We had some ad hoc mechanisms, right? Then we merged 10 public sector banks into 4 banks. I think you guys would be aware of this. Worst thing that we did as economy is privatizing all the public sector banks, which I think, okay, leave that. Then we also started a development finance institutions to finance infrastructure assets, which need 10-year, 15-year loans. Okay, I'm just going through what all we did. Okay, then see how many different kinds of, how many new banks we have created. IDFC and Bandhan is a new banks we have created, and also small finance banks. These are the new small finance banking license. And when all this is happening, even regulations were getting up to the, I would say India is the only place where regulator is at the forefront of the innovation. It is like in most places first innovation happens and then regulator will find out what is going wrong and how to control this. But it looks for me in India, it is regulator is trying to create and show the direction for how people to innovate. Like recently there's a regulation where payment banks are being questioned, boss, are you a lender or are you a payment bank? Like something like that, like are you a lender or are you not? So how can you give credit? So there are, I feel that there is a, I'm not able to uh, make you understand in a very 1-2 sentence thing, but I want you to understand that we are in a country where regulator is at the forefront. Okay, give me a minute. So regulator is at the forefront of the innovation, showing the direction to the whole system on how to go about. So now you can see what all we have done, from Aadhaar to UPI, then demonetization, then these things taking off, payment banks, and then Rupee network, and then we are now building OCAN. I will explain you more deeply, and this is a graph that is just giving you a timeline of what all we have done from 2010 to today. So let me now digress and go and talk about digital India. See, why am I discussing this? What I told you is banking system is one which can provide credit to all kinds of customers. Let's say there's a pan wala somewhere. Instead of, how will you provide credit to him if you don't know how much he's earning? So there's a huge effort towards digital India. We did Aadhaar, post Aadhaar we did Jandan accounts. We tried to open accounts for bottom of the pyramid people, and then we had UPI. UPI is the open payment system. Then government did demonetization. It took off. Digital payments took off, but not up to the mark. Then COVID came. As if COVID came for us to create this, bring all this digital innovation and give the fillip to digital innovation. COVID gave huge fillip to the digital innovation because we already laid the foundation, right? Internet penetration has increased. Everybody has a bank account. Because of demonetization, more bottom of the pyramid people opened bank accounts because they thought they'll get some percentage of the 2 lakhs that got deposited. So, and then even though post demon digital payments took off, but again came down. But COVID has clearly created a direction for us, right? So if today, if you are, whatever business you do today, you are in a position to do all your transactions digitally. Whether you do it or not is a different case, but you are in India, from Kanyakumari to Kashmir, you can do, if you want, all the transactions digitally. What is the advantage of doing everything digitally? The advantage of doing everything digitally is, boss, whether you file income tax returns or not, let's say you pay your GST digitally, you collect all your revenues through Paytms, Phone Pays. I can see your transactions and start giving you loan, right? Let's say you're an ice cream cart vendor or a pan wala, or it's like you're running a small tea shop. If he collects all the revenues through UPI, then boss, I can just see the revenues, line items, and just start giving him the loan. Previously, it was not possible. So digitization makes it more frictionless to give loans, better understand the customer. Maybe we'll make some mistakes, but we will improve our systems and start making credit available to larger population, so that credit GDP ratio of our country takes off. And that is very, very important for us to have a sustainable GDP growth. Because just imagine, if you are a businessman, if there is no finance available to you, how will you plan for your future? Right? There should be different institutions which will take different kinds of risk, and that should be okay with us, right? So I will just go back and show you what else we did. Payments interface, identity layer is the Aadhaar, eKYC sign, and then payments layer is your UPI, your Paytm, Phone Pay, Google Pay, this is an open payment system, right? In any other country, if you are transferring money through UPI, you may have, this is owned by some private company, so some charges are levied. And just imagine how much new innovation and how many new use cases are being built on this open payment system. And just imagine how much easy it has become for you to pay because of this being so open and this taken off. Just imagine you have to go to, if let's say you're using Swiggy, you have to go to net banking, use OTP. Will it take off the same way? No, right? So we have made our payment system open. Any business can address any use case and start providing the solutions. Okay. Now let me call this UPI open payments. Then we created open data. Open data is your account aggregator. I'm not getting deeper. I know people are not at all related to finance may not be understanding. This account aggregator is like open data. I will explain you when I explain you OCAN this better. So this is how UPI works. I don't think we should get into discussing how UPI exactly works. And now, can you believe we have our market share in digital payments is 40% of the world. Our payments together are more than combination of China, UK, and US combined. And you know what how people used to mock Digital India and all these things in 2016, because see, we have to. This is what I was trying to uh, make a case for in the previous videos, that we should try to build competencies. We should lay the infrastructure. We may fail in Digital India, we succeeded in something else, we may fail, but that is how we should move forward as a nation. We can't say no, it can't happen in India. Boss, we should try. Who thought that Indians across the country, length and breadth of the country, will now are getting used to transacting digitally, right? This is account aggregator. Account aggregator is trying to get consent from the individuals and firms on whom to share their data with their own consent. Let me not go deeper than this. This is open data. If UPI is open payments, account aggregator, you can call it open data. Wants to know deeply, you can go Google it. And then there is open credit. Let me call it open credit now. See, this is what I was trying to tell. You need to provide credit access to as many people as possible and try to fund their current operations and their future growth. So OCAN is now RBI is going to come up with digital lending guidelines, and we have already created this OCAN system where lenders can meet borrowers through different apps, and on apps they can start borrowing and paying, and who knows what all may happen here. I'm not getting deeper into these things because these are all work in progress, but just understanding we have open payments, UPI though you can see, I need not explain. Then open data, which is account aggregator. Then this is open credit, and this is like open lending. You can call OCAN as open lending. Borrowers come to the platform, consumers come to the platform through some app, either through Paytm or some whatever app. And then borrowers, you have different borrowers on the app whom you can borrow from, right? So this is what they are trying to do by creating OCAN system. Okay. Then next thing, that if it takes off, we are lucky if in India it takes off, is ONDC, which is digital commerce. I'm not even going into what it is because it is still in the ideation. I think things are starting to happen. There's a pilot happening in few cities. Open digital commerce, ONDC. So why am I explaining you all these things? These are the foundations that we have laid. Okay. These are the foundations that we have laid, which will help us provide credit and funds people's growth. If I have credit, I will do X. If I don't have credit, I'll do X business. If I have credit, I'll do 3X, 5X, 10X business, right? But you need to create infrastructure for it. You need to create guidelines for it. You need to create different institutions for it, and that is what we have done. And you can please pay attention to ONDC and OCAN. It will become so easy to borrow. And who knows, I may not bet in any of this. I may make my bet on a data analytics company which is collecting data from all these people and giving insights to the people on these platforms. Instead of trying to bet on the platform or some company which is lending, I may actually bet on an analytical company, data analytics company, which is trying to use this data and provide insights to people who are using these platforms, right? So I'm trying to make a case that we have laid we have done all the plumbing work required to provide access and take our credit GDP from 50%, 60% to 100, 120%. And I think regulation wise, plumbing wise, access to credit wise, I think we have taken care of a lot of things. And if we go from 3 to 9 trillion, I see credit or banking system doing very well. And I think huge opportunities will open up. Too many people will benefit. Whom to bet is a bottom up thing, which I keep on telling you. That is a different exercise. So in this video, I want to make a case for banking doing very well and Digital India propelling banking. See, Digital India is just not propel bank. Look at how many companies have been created just because of Digital India. I'm not going deeper. This is not Digital India class. I'm making you understand that you have to do the foundation work. You have to work on it. You have to take risks. put up the regulations, create an ecosystem, and then some people will come, take risk, and that is how growth will happen. So I think I've explained to you banking and digital India, how India is now leader in the digital world, and how lending is becoming more accessible is what I would use the right word, because anybody who wants to take the loan and who thinks they can work hard and pay back should be have the access to credit. And I think we have laid the plumbing and regulations for it. And I think we should see what it's a dynamic exercise. I told you, it's not that today I've made this impression and I won't change my mind. It's a dynamic exercise. If things are changing, I will change. But I think I'm very positive on these two things. You may not bet on the lender. You don't need to buy Paytm, but you may buy an analytic company, or you may buy a buy now pay later company. We don't know, but you should be open to opportunities. The guys who may benefit most may be the MSME guys, because hitherto their access to lending was really bad. Who knows, micro enterprises and small enterprises, medium and small scale enterprises, who knows, their access to lending has gone up immensely because of the OKN that I spoke about. So the biggest beneficiary of the OKN network may be the MSME guys, and you need to find a company which actually will play that tailwind in a more robust and in a proper way, without lending when I say proper way, without doing a lot of bad loans. So this is just going to boom. Only big assumption is, where you can ask me then, where will we go wrong? The biggest assumption we are making for all this was GDP is going from 3 to 9 trillion, and India is doing all the things required for GDP go to 3 to 9 trillion. If GDP is going from 3 to 9 in the next 10, 12 years, take it from me, banking, digital is already taken off, and people who use it and create great companies out of it will create immense amount of wealth. And I think we should position ourselves if we can find some great guys. Okay, thank you.